All right, Blake team. Thank you very much for laying it on the court again all week long. And have a great weekend, recharge, and we'll do it all again like Groundhog Day, right, Jens? So welcome back to F.A.C.E, Jens. How are you?
Thank you. Good. I just had a quick look at the payroll numbers, so that's why I thought
Right.
8:35 was better than 8:30 for me.
Okay. Yeah, we multitask, we trade when we're broadcasting, but what was your take on it? Surprised by the strength?
No, so we have a model where we look at 40 labor market indicators, and that one had set 249 into this number. So I think from all the alternative data that we look at, this was very much in line with that. Obviously, the wages actually probably the most important, and
Okay.
is yeah, I think the Fed is going to look very closely. Definitely, Powell is looking very closely at the wages, right? So the fact that the momentum on wages were up is something that is going to make it hard for them to cut, right? So
Yeah, maybe will he tighten one more time and throw the market off? Everyone doesn't. Most people don't think there's another hike.
no,
They they're in fact they're praying for a pivot. The most they're going to do is pause,
yeah.
right, Jens?
So I think we're at a point in the cycle where analyzing the Fed is much more complicated than normal, right? Because
Yeah,
in a normal environment, it's mostly about growth and inflation, right? And well, in the old days, it used to be only about growth because we had no inflation. So if you looked at growth, you essentially get the answer.
right.
But at this point in time, I think we essentially have three things in addition to economics that you should focus on, right? So there's the normal tracking of data that the Fed does. Again, inflation, growth, and so forth. And the second thing that they obviously talking about and actually got the most attention in the press conference this week was, okay, they're trying to calibrate what the credit drag is going to be from the banking tension. But I think there's actually a third thing now, and that is that we have outright financial instability, right? So
Yeah,
if the bank system is so unstable, right, that the regional banks can go down 15% in a couple of days, then that kind of has potential to dominate everything else. So that's the dimension that makes it hard for them to hike further, really hard to hike further. But on the other hand, like we have a situation where we have inflation that's still way above target. You can look at the wage numbers today, right? The wage numbers today are not consistent with 2% inflation, right? So even the momentum we have in the wages today are essentially suggesting that the Fed still has work to do, right? So they're stuck
yeah.
in a very tricky situation, and I think a pause for several months is by far the most likely.
Okay. And what are your what's your research saying about what could be the effect and perhaps even the outcome of the debt ceiling debate, theatrical play? Everyone consensus is, like always, there'll be theatrics, but they'll get it done. Do you think there's a lot of complacency about that?
Yeah, like US politics are getting more and more, should we say, complicated.
Like
So,
everything is, right? For the Fed, politics, you
yeah,
know, everyone wants to go back to the good old days, Jens, with a Fed put, and they're gone forever, or for at least for a few decades, don't you think?
yeah. So everything has changed because we have inflation, right? So you've been doing this for a few years, right? I've also been doing it for a few years, maybe you're slightly ahead of me, but
Oh, what a nice compliment. Only slightly.
so I started doing it in 2000, roughly, right?
Yeah,
And so in my career, we really had no period with meaningful inflation except the last few
right,
years,
right.
right? And this goes back to the first comment I made, right? It used to be the case that when you analyze central banks, the only thing you had to focus on was growth, right? Because if growth was a little bit soft, you knew there's going to be very easy signals from the central bank immediately, right? And this is just what's fundamentally different now. It's not so easy for the Fed or others to be super dovish when inflation is way above target, even if there's some of the growth indicators that turn, right? So this is to do with the put, right? The put is cannot
Even
be
with the banking crisis. You know, if
yeah.
we
So
had not had this banking crisis, Jens, do you think we'd be pivoting?
no, definitely not. So
Okay.
so don't forget that in March, before Silicon Valley Bank cracked, the plan was to raise the dots substantially. So they abandoned that plan because the banking tension came. We've still delivered hikes in March and May, but they have abandoned the plan to move towards 6, which was the plan that was in place, never written down, but it was the plan before the March meeting, right? So they've already incorporated some effects from the banking tension. It had an impact, right? But just ignoring the inflation, outright cutting rates, right, is a tough decision. It's much easier to pause than
Well,
to
are the
actually cut.
70s our only market analog that we could really point to? Because there were, if it is, there'll be a pause, and then they're going to have to restart tightening again 3 times. Isn't that the 70s parallel? I mean, I traded when Volcker was Fed chairman.
Yeah.
So, I remember people were even watching the last thing to fall from the pressure of 19% T-bill rates was corn.
Yeah.
Everyone was focused on corn because that was, contributing the agricultural prices like they, could again. Inflation, once corn broke, that was it. So that was the beginning of the bull market in bonds. But
Yeah, and I think also this is something that's relevant in relation to what the thinking is within the Fed. Like everybody has studied those periods. Everybody in central
right.
bank circles don't want to make the mistakes from that period. Like even like if I it sounds like I'm kind of self-promoting here, but like if I look back to last year and think about, okay, what are one of the best calls, not me personally, but ex-ante data made, it was that the ECB was going to be aggressive, right? And that
Yeah.
was really about saying we now have an inflation shock where the key people within the ECB are going to remember what the Bundesbank did in the 70s and the 80s. And remember, they were much more aggressive than the Fed early on, right? And they had much less inflation, and it was success. It's not that they had no inflation, but they had a smaller problem than many other places. And that memory has been a key part of the ECB wanting to be pretty aggressive and frankly surprising everybody. Like who you're going to ask somebody like, a year ago, is the ECB going to go to 3 and 4%? Almost everybody would have said no way, right? But they become much more Bundesbank-like, and it's because of that institutional memory going back to the 70s and the 80s for sure.
Okay. I want to ask you, and this was your bailiwick, was currencies, right? So have you ever, and as Exante picked up on it, had so much talk about de-dollarization and the end of the dollar that even people on Main Street are asking me about it, gents. Is it justified, or is it setting up what could be a pretty vicious bear market rally once we get some type of low here, maybe a little panic under par, and then turn it? What do you think? I know Ray Dalio's #1 trade, right? I forgot who told me about this yesterday. Is short the dollar. It's his layup trade. Do you think that we could? You think? And what trade is ever a layup?
Yeah, so I
When
was
you
just about to say that I've never seen such a trade, but there are some trades that have nice asymmetry to them, but it's never 100% asymmetric. So
big
I would
break
say,
from last fall, 14, big break, trying to put in a bottom, can't find COT is hugely bullish. Euro, I think that we're maybe coming close to ending this move in
Yeah.
euro.
So
Maybe
so on the de-dollarization, right? So clearly
yeah,
I get asked about it every day.
yeah,
So I would answer this way, right? So as I said a couple of minutes ago, like I started doing this in around 2000. And for me, I've been through three periods where there was a lot of talk about, some kind of dollar problem, some kind of reserve
yeah,
currency problem. The first period was in the period 2005, 6, 7, 8, right? When the dollar was going down in a, what should we call it? Fast. It was going down fast, right?
yeah,
Euros traded up to 160. And at that point in time, it was linked to, okay, the US has persistent current account deficit. They also have a tendency for twin deficits. Those are hard to finance and so forth. So it was sort of linked to typical current account analysis. That was the talk back then. We had some famous celebrities, right? That
oh yeah,
in that
they don't want to
poker.
get paid.
They
They want to get
well, they
paid.
don't want to get paid
Right,
in dollars anymore, even though obviously you can go and exchange the dollars after if you get paid in the wrong one. But anyway,
right,
so there was that. Then there was a period from 2009 to 2013 where we talked about QE infinity, right? We talked
yeah,
about the Fed is always expanding the balance sheet. We're always printing money, that kind of thing. But what happened after the first period, right? We had the global financial crisis and the dollar strengthened very substantially. And that kind of shocked people. Okay, how come the dollar can strengthen if most of the problems are US subprime, that kind of thing? But that's how a reserve currency actually behaves, right? And then obviously since 2013, we had, China kind of had their blow up.
yeah,
We've had the negative rates in the Eurozone, low global growth, right? And we've had a very epic global dollar run since 14 up until really call it October last year, right? A big one,
yeah,
right? So
yeah,
the dollar definitely did not die in 2007. It didn't die in 2013, right? So the question is whether this is something different this year. And there is something that's very different. And that is we have a very big economy, the Chinese economy, and it wants to create an alternative to the dollar. The
right.
European nations have never had that ambition. They've actually had the opposite, that they say, oh, we do not want the euro to be like an international currency. We don't want other countries to peg to the euro and so forth. So China is different from the euro in that China has a goal of becoming a reserve currency and competing with the US. And it's not just China, right? We also can
The
see,
BRICS.
yeah, there's the BRICS. There's obviously some countries that are willing
How
to,
about Saudi Arabia? That would be
yeah,
very
yeah,
important, right?
yeah. So there's Saudi
Petrodollar.
Arabia, there is China, India,
Yeah,
BRICS in general, right? Then there's a Russia dimension that is not the same, but they're kind of related to each other, right? Russia has its Western FX reserves frozen, right? So they are seeking alternatives. They are buying Chinese assets, right? So there's something going on there. There's an effort by
right.
big economies. Like if you add the size of those economies up, you talk about very big numbers, right? So there's an effort to do something. The problem is that just because these countries, China especially, have a goal,
A
doesn't mean
desire,
they're going to
yes.
get to their goal,
Right.
at least not quickly, right? So what we can see in the data that we track, can I share my screen?
Oh, of course, yeah.
So I think you need to permit me. Maybe you need to make me a call. Oh, I can
No,
now.
you can do
Okay,
it.
that's
Yeah.
exciting. Yeah. So I'm just going to pull up the normal site here, and we can look at a little bit of data together.
And we don't want to forget that it's Karl Marx's birthday as we celebrate the NFP. You don't want to forget that you're rolling out a new product that you wanted
Yeah,
to talk about.
we have a second company. So hopefully I can share two screens. I'll start with one. So now I'm on my own own website.
Website,
So if you go into
right?
China Flow Analytics on the China page, right? So we can we can look at what's going on with bond flows into China. You see these two charts here?
We do.
Yeah. So these are interesting charts to look at. They're not good charts for China because nobody's buying Chinese bonds, right? We had a period in 2000 when yields globally was zero. And then essentially in 2022, January, when yields started to rise globally, there was a shift, and we've had essentially selling since then, right? So this is a very important chart when you think about, okay, is China really gaining reserve currency status? In terms of what's going on in terms of bond inflows, there's no evidence of it at all.
Okay.
So that doesn't mean there's not other aspect of trade, equity flows, FDI, and so forth that could be more supportive. But typically, the bond market is really at the core of creating a reserve currency status, and that piece is entirely missing. Like, it couldn't be any more clear. We have outright dramatic selling, right? So nobody.
Would the U.S. excuse me, Jens? Would the U.S. Chart look any different than this?
Yeah, the U.S. chart looks quite different. So the U.S. data is
so there still are flows coming into bonds in the U.S. despite the worst bear market in 150 years.
Yeah. So whether it's central banks buying or whether it's private sector buying, like, so European investors are still buying U.S. Treasury securities, like, to give one example, right? So we track that closely. Yeah, another data point, like, we have so much data on the platform, I'm not gonna like show all the time series that we look at, but foreign direct investment into China is another one, right? So in the COVID period, right, where everybody was sitting at home and wanted to get a new coffee machine or a lawnmower or whatever, right? China's production really boomed, and lots of multinationals tried to expand their production as fast as they can. So there was foreign direct investment, so i.e. not bonds, but people building factories and so forth. And that has also shifted down big gear, right? So there's lots of things that China want to do. They want to become the reserve currency. They want to be a competitor to China, to the United States. But China is not really able to attract bond flows. And then they also actually have this problem that people are worried about supply chains, right? And they don't want to have all their supply chains just so reliant on China. So it's really running into some serious difficulties, this plan that they have, right? So that's the counter argument, right? So really, when you talk about de-dollarization, right, you can come up with a lot of arguments on the US side where you say, okay, we do have a lot of debt. The banks look not so good, at least the regionals, right? And the politics look terrible. And then you mentioned the debt ceiling, right? So like debt ceiling in relation to reserve currency status is like literally like an own goal. Like, how are you gonna like try to undermine your reserve currency? The best is like talking about some, like, random default every year, really for no reason, right? So that there's a lot of negative stuff you can say about the dollar, but the problem is, what's the alternative, right? What's the alternative?
Gold.
And it's very hard to find a fiat currency that looks attractive. So there's obviously some fiat currencies that have done very well. The Swiss franc has done very well on a multi-year basis. But even if you go to other countries that look like they have sound balance sheets, right? You look at Norwegian kroner, right? Is it trading well? Not exactly, right? So it's not so straightforward just to pick, countries that have, traditionally good fundamentals. And obviously, some people will say gold and Bitcoin, and gold had a good run. Bitcoin has traded well in recent months, right? But depends a lot on what your starting point is, how good that
depends
looks.
If the sun is out or it's dark outside. Jens, I want to talk about something. I don't know what your feelings are, but I think it's really being ignored, that as the biggest monetary story since Bretton Woods, and that's the CBDC. Do you have what's your view on it? Are alarmists you know, a lot of alarmists are saying that, you know, it could end up being a surveillance currency and credit scores and all of that. Do you think it's going to happen, or there'll be pushback? And what's your view on CBDC? It is a big story, isn't it?
Yeah. Like if you think about the possibilities, good and bad, that you have with proper digital currency, intelligent digital currency, I often get this people say, but we already have digital money.
Right.
So there's a little bit of like a gap in sort of understanding of like what we really mean when we talk about digital currency now is like an intelligent form of money, right? Where each unit can be monitored individually, right? Which is not the case with the type of digital payment system we have now. And so just to give an example, right? If we had another pandemic, right, where the governments thought it is very important that we stimulate the economy over the next 3 months, we can issue a type of digital money, right, that has to be spent within a certain amount of time, right? So policy flexibility in relation to this type of money is of a totally different dimension than we've had before, right? We used to talk about, you know, we're just going to solve problems by doing quantitative easing, right? And there you created some money that just went into some financial institution that didn't have to spend any of them. In the COVID shock, obviously, we transferred cash to households and so forth, and a decent amount was spent, but the wealthy people didn't have to spend it, right? So if we can actually say you have to spend this money, like you can really kind of micromanage the economy in a way we've never seen before. So has incredible opportunities. I think also in the last couple of weeks, in relation to the bank tension we have seen, and in relation to the incredible deposit volatility that we all know about, like, you know, $40 billion leaving one bank in a couple of hours.
They wouldn't have been able to.
It's just a different regime, right? So the ECB talked about that yesterday. Central bank digital currency is potentially part of a solution to this problem, right? If deposits become very volatile, perhaps having central bank money is one way to get around that deposit instability. So it has a lot of opportunities, and then obviously there's the negative angles, right? So does everybody want to know? Have the government know what you do with all your funds? Do you want to have maybe some people don't even want to have, you know, their spouse know what they do with their money, right? So so there's certainly a privacy element to this that can be very scary. It obviously depends on what country you're in, right? I think we know some countries that will use that surveillance mechanism very aggressively. We know other countries where we're going to have very strict regulation as to what we can do with that type of information, right? So it's going to depend on the country what the side effects are.
Oh my God! So we have to trust governments.
Well, I have more than one passport at the moment, right? So some people are privileged to, they can maybe decide where they want to move.
You're politically diversified, gents.
I am a little bit.
Doug Casey used to write about that you not only need financial diversification, you need political diversification. Because if you get the markets right and you're in the wrong place, it won't matter.
The point is, right, that we're going to live in a world where governments in certain countries are going to have just much more power than they've ever had. And that comes from the existing ability to surveil AI and so forth.
Yes.
And the digital money will be sort of the icing on the cake in a way, where you can track, monitor, categorize all these transactions in a way that's never been possible before.
Okay. Is AI the hottest topic in FinTwit world right now?
Yeah, so if you allow me, I wouldn't mind showing you the new company where we use AI. So let me see if I can.
Oh, see, what a great segue. Thank you for setting it up.
Yeah. let me just see here. I'm gonna stop sharing 1 second. I'm gonna switch because I'm gonna switch to a different company. So that's why I have to I have to actually just maneuver things around, but I think it should work now. Share screen. All right, you see some red and green now?
Yeah. Yes, I do. Market reader.
So this is an example of how we can scan what's going on in the market using AI and technology. So today, I've just looked, okay, what is moving the most unusually in the market, right? And we scan the market, and we can go and look at different stocks, right? What's going on with them. And what I wanted to illustrate is that, see where we want to start. I'm just moving my face around.
So the difference between this and, other market sites that don't use AI, how does AI give it an edge?
Yeah, so you can see these cards on your screen now, right? And I've just filtered so we're watching everything that's going on in terms of US listed securities in Market Reader, right? And what we can do with the technology is that we can generate a human readable summary, a couple of lines of text, one paragraph that literally explains why that asset is moving.
I see.
So this is different from having to look up the Bloomberg screen and scan all the news headlines.
What a time saver.
Yeah. So this is we have a lot of structural models where we really pinpoint what the explanation is, but what we're using the AI to is to give a human summary of it, right? Because we might have 20 model outputs, and then we use the AI to say, okay, just give me literally 3 lines of text that summarizes it. So I think this is going to be a new way of reading the market. I'll just show one more thing, right? So if I just want to say, okay, what's going on in financials, specifically going on in banks, right? So again, this is what it looks like today. It's happy days today relative to what it has been in the last couple of days.
It's green everywhere.
Yeah. So what you're seeing here, like for example, if you zoom in on the first one here, Key Corp, right? Okay. The system has scanned all the news that could be related to Key Corp, and it has found that there was nothing. So it's telling you instead that it's up on sector strength. It has analyzed everything that's going on, not just with Key Corp, but what is going on with the whole market, and infers that the reason why Key Corp is moving is because there's a sectoral move to which it is correlated, right? So it's a different way to create intelligent news. And we have, just examples of this. Obviously, we can go in and get more detail, right? But the bottom line is that these insights that we have here another example here it's US Bank Corp again. It's just moving with the whole sector, and the system knows that. Whether it's like, do I have to look for anything that's company specific, or is it a correlated move to the entire market? So this is something that we have worked on very hard. And like, I will give another example, right? So I just zoomed in on the banks there, right? But another way you can use this technology is, if Delta Airlines reports something and it says something about demand for tickets, they can move United Airlines, right? So in a traditional way of scanning the market, you go and look at United and say, there's no news about United. But through the market reader system, we could do news by association. If United moves on Delta News and we have the statistical correlation,
you'll know why.
Correctly, we surface that by association. So there's a lot of the moves in the market that are of that nature, and they are missing from traditional news coverage. So I'll do some promoting here, right? So Market Reader is a technology that we've worked on for 18 months now. This is hard work. There's some pretty serious modeling going on. We have a lot of data, and we're going to launch it probably in a month's time, right? So I certainly recommend that people go in and sign up on the marketreader.com site. And then if you sign up there, you'll be amongst the first that we give access to this tool. And I think it's going to change how people absorb financial news, right? Because you know how it is. It's still so manual that you have to go, okay, what's going on with that? What's going on? This allows you to really get everything in one go. Like it could just be, it could be used in so many different ways. Like we're not finished. This product is not finished, right? But the technology is there. And now we just have to apply it in good ways. Like, so one thing we're working on literally this week is, okay, we want to create alerts, right? So if you have 20 things you're particularly interested in, like you want to get alerted if those instruments are moving in an unusual way, right? So we can, because we can summarize what's going on in 3 lines of text, we can even get you on the phone. Like, okay, here's why you made 4% on Coinbase or whatever it is you did.
Yeah.
I don't own any of that, obviously, but you can get very succinct alerts. And the key thing to making that a successful product is that it's free of garbage. Because that's the other thing. If you go and look for news on any kind of stock, if I pull up on my Bloomberg that costs $25,000, right, you get a list of news. You'll get like 30 items, and it's like filing this, filing that, could be totally irrelevant stuff. Like you're pulling up Starbucks and it says,
and the market's already gotten away from you.
Yeah. So we have a way of filtering the news where we only zoom in on the stuff that is truly market moving. So it just saves an incredible amount of time, right? Because you don't have to do that human filtering. And if you save that time, you can look at so much more, right? And if you can look at more, you can be better informed than the other people. So that's the philosophy we have.
Well, it sounds really, time is more precious than money, because money comes and goes. Time is gone forever, right?
Yeah.
And
there's somebody asking for a link, so I'm gonna put it in here because this is what we're going for.
Well, I wish you much success. If it's like your other endeavors, I'm sure you're going to do quite well with it, Jens. Also talking about time, let's not let as much time pass between our conversations. And really appreciate you sharing your insights on what's happening, on the market scene right now. And best of luck. We're fans of yours here at ForexAnalytix.
I appreciate the support.
All right.
Thank you so much. I put the link into the chat, so if there's somebody who want to have a look at it there, they can. Thank you so much.
Okay, and they could always find you on Twitter at Nordvig.
Yeah.
And get a hold of it that way if the link isn't working. And so
good point.
So sign up and be part of Jen's beta test on Market Reader. Have a great weekend, buddy.
Thank you. Thank you. Bye-bye.
Jens Nordvig, everybody. Don't just count your pips, count your blessings. See you guys next week. All right. Hope we've added value to your experience here. Good luck. See you Monday. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.